Alright guys, welcome to the reaccumulation video. Essentially, right, in the past two videos, we covered the reversal side of Wyckoff, which is studying the conversions of supply to demand, demand to supply, and just studying, reversals, right? But keep in mind that I've always told you guys to keep, always go with your continuations over your reversals, because at the end of the day, we don't have enough data, we don't have enough information to assume that those big trend shifts are going to happen, right? So we always play based on what we have, which is structure, volume, right? And anything of such that we've shown, which is the order flow, momentum, et cetera, et cetera, et cetera. So, right, reaccumulation, right? And if the images you're seeing are a bit blurry, these are actually from the PDF that I have in the document section, so just feel free to load that up. But anyways, reaccumulation, right? The definition, right, is the reabsorption of an asset's shares or supply over X period of time, right? So I didn't put at desired price because I think that's more of a narrative thing, not a Wyckoff thing. But anyways, right, in simple terms, right, it is the recollection of demand. It is the recollection of buying positions. It is the rebuying, okay? Whatever you want to say, right? So before we start covering this, automatically I know that a lot of you are thinking, how do I differentiate reaccumulation from from distribution, right? And there is no set way, which is why I always prioritize structure, which is why I always prioritize volume, right? And just knowing how to read price, knowing how to read momentum, price, in terms of structure, volume, momentum, all that stuff put together, right? Which gives you a narrative to play based off of, which is why we always wait for it to show its hand, right? For that optimism factor, which then gives you where this wants to go, right? So you always have to keep that, in the top of your mind. Why? Because you have to be essentially dynamic and you have to be prepared for both scenarios. Okay, so coming into the examples, okay, right, as we can see, we have our preliminary supply and our buying climax. We have our climactic action in our volume, right, which then led to our automatic rally, right? So now keep in mind, right, we could assume a distribution because, sorry about that, we could assume that because we're seeing that bullish diminishment in volume, right, and we're seeing price give you those initial structure breaks. I'm sorry about that. Anyways, right, after our automatic rally, we came back to challenge a previous high, no structure break whatsoever because the leg was intact, right? So as you can see, even this is a very deep retracement, we still technically mitigated something there, so you could only assume this to continue lower. But anyways, right, what ended up happening was after the automatic rally, after this immediate reaction after the automatic rally, right, we start seeing price not give you that substantial new low, right? So if we're seeing this high coming down to the low, a potential retracement to then go lower, right, the retracement ends up leading to a liquidity grab, right, because we took out our previous low and then took out a structure point, right, which solidified this as a low, solidifying it as unwillingness, which gives you that secondary test aspect there, right? Immediately after that, after the liquidity grab, we see that initial optimism. I wouldn't consider it the full optimism because we're still inside of the range, and I want to see something a lot more convincing before we start assuming bullishness. So here, keep in mind, we come back to fill this inefficiency here, right, signifying bullish order flow, which then leads, right, to essentially creating relative equal highs. But because we have unwillingness, a higher low, and another higher low, right, we then create optimism inside of the range, which gives you a reason to want to buy, right? So even though we then came down to take out essentially these levels of structure, right, because we created optimism, here to here is our new leg, our new full leg, right? Because high, low, retracement, unwillingness, new high, retracement, continuation. Okay, so after our LPS, right, keep in mind this entire time while the optimism is happening, while this LPS is happening, right, supply is definitely starting to diminish while our demand is starting to increase, right? So this is that conversion aspect, right? We're seeing structure aligned with volume, which is creating a reaccumulation schematic, right? That is how you see the difference, by actually analyzing what's inside, what's happening, right? So after the LPS, we lead to an SOS, which clears the previous trading range. And I didn't add that here, but this is the BU/LPS, right? The completion of phase E, which then led to that essential higher high and that, expansive move to the upside, because we've already done our job of recollecting buying positions, right? Which led to price going higher, right? So very, very straightforward per se. All you really need to know is you need to know how to read structure. You need to know how to read volume, right? And I think those are the priorities here, right? Anyways, example number 2, AUDJPY, right? Once again, we see our climactic action in our buying climax, right? I prefer this so much more than not having it, because it already gives me that kind of confidence per se. And so for the most part with you guys, I would say definitely look for that, but just because it's not there, it doesn't mean it's the end of the world. Okay. But anyways, buying climax or automatic rally, secondary test to test our buying climax. Right now, this isn't mitigating anything from just seeing this, because this previous wick was taken out. So this is now signaling to me an unsupported move to the downside, but we're still bullish because our leg is bullish. Okay. So, right, we then come into this ST area, the secondary test area, right? And keep in mind that our bullish diminishment is happening, because this is how the recollection starts, right? So after the ST area, we come up, unwillingness, right? So now technically we might be switching over to a bearish perspective. So after that ST area reacts, we then come lower into the spring with high volume. So it's still very, very uneasy to want to continue buys, because we have high supply, right? And we have this essential trend shift, because we had the reaction, the retracement, and a potential disruption of bullish order flow here, right? But immediately after the spring, as you can see, we mitigated the 50% here of a sponsored candle, which led to optimism occurring, a jump across the creek, right? And this is done on very, very high bullish volume. So that's showing optimism. It's showing that intent. It's showing that momentum. It's showing a want to go higher. Okay, so the optimism factor is there, right? Even took out multiple levels of structure, right? So this now gives me a clear sign of showing its hand, because we're still overall bullish. So now we're still overall bullish, and it's showing me that. So the LPS came back to mitigate. I believe this was H4. It's not on this time frame, but it's on H4, but that mitigated there. And that inevitably led to an SOS, which took out our trading range, right? Which then led to our BU LPS, all through the process of 1, 2, 3 mitigations, signaling bullish order flow is strong and intact. Why? Because notice we aren't seeing many mitigations, right? Which shows that it's strong, right? It shows that they're effective. It shows that they're, doing something. So that's showing me intent to want to go higher. Okay, so our final example is USDCAD, right? As we can see, this is an example of a buying climax with no climactic action in the volume, but in the preliminary supply area, we kind of did see that but I don't want to force it. But anyways, we are seeing an overall diminishment in volume, buying climax. Keep in mind, we're still bullish, right? So we have an automatic rally, right? Came back. This could have been a secondary test. I just call it a resistance area, because it looks like a resistance area, and we didn't come back to test the buying climax, so I don't want to call it a secondary test. But anyways, after this resistance area, we came down and we started essentially messing around the automatic rally area. So I'm gonna call this my secondary test area, because it just makes more sense. But as you can see, right, we came back to mitigate the previous wick here, right, which led to optimism by taking out the resistance area. This is, to me, showing its hand, because even though we haven't taken out the full level of structure here, we're showing intent to want to come higher, right? Especially if this high is sustained and we don't just rapidly come down. But anyways, we did have an unwillingness here, which led to the mitigation of, I believe this is M2, M1, a candle in here. It mitigated that, right? And then after that, we mitigated here, led to another mitigation, right? LPS, LPS, increase of demand, increase, steady increase, right? While supply is diminishing, right? So this is now creating that recollection that we keep talking about and creates an enticement to want to go higher. So now we see our sign of strength by taking out the trading range, right? So this BULPS is only a smaller term confirmation, a smaller term continuation, I'm sorry, right? Which then led to price continuing higher, right? So the key takeaways, right? Know your structure, know your volume, right? Know how to read momentum, know every single little detail, especially about order flow. And these schematics will start making more sense, not because you're trading schematics, but because you know what's happening inside of the schematics. And I think that's the big difference maker right there. And the big clicking factor for some people, right? So I don't want you to focus on trying to annotate, because maybe, you know, if I go to a hardcore Wyckoff trader, he'll probably call a lot of these wrong, but I'm still following the ideology, right? So just keep in mind when you're trading schematics, right? To be a Wyckoffian isn't to trade schematics. To be a Wyckoffian is to essentially trade the principles given, right? It's to know how to read effort, right? Know how to read structure, know how to read trading ranges. The accumulation of all that put together is what makes you a Wyckoffian, right? So just remember that. You don't have to stress too much about the abbreviations. You just have to know what's going on. Because if you don't know what's going on, then you're probably not going to win to begin with, you know? But anyways, I'll see you guys in the next video, which will be the redistribution video. So yeah.